Hello, everyone, and thank you for taking the time to review the Santa Clara County, California real estate market analysis for March of 2009. My name is Robert Whitelaw. I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro, and I'm also the president and CEO of Whitelaw & Sons Real Estate Services, serving all of Southern Silicon Valley. Now, if you'd like to get in touch with me, you can find all of my weekly podcasts, monthly market analysis, and also articles I've written on real estate at my website at www.soldbyrobert.com. If you prefer to get in touch with me via email, just send those to robert@soldbyrobert.com. If you prefer to dial directly, please feel free to call 408-852-0525. If you'd rather use your online messaging software, I have accounts on AOL Instant Messenger, Google Talk, and Yahoo IM, all of them with the screen name The Rebel Broker. And if you're a Skype user, the screen name is Rebel Broker. Now, referrals are always appreciated. If you or anyone you know is interested in buying or selling real estate in Silicon Valley area, please feel free to get in contact with me. And even if you are not in the Silicon Valley area, if you need a real estate agent designed specifically for your needs, feel free to give me a call, and I will find the right agent for what you're trying to do. So give me a call or contact me in any of the ways listed above, and I will help you find the perfect agent for you. Now let's go ahead and jump in and take a look at the supply and demand numbers. You can see that we've actually got some pretty good numbers here on the year-to-year comparison. Now remember, this is just the month of March, going all the way back to 1999, so we don't have to worry about taking into account any seasonal changes or anything like that. This is just March, going all the way back to 1999, and you can see that compared to last year, all the numbers are heading in a better direction. So first, let's take a look at the number of homes that are currently in inventory. You can actually see that that's down from the same time last year. The next is listed, and that's also down from last year, which is good news. And you can also see that sales are up. So all good numbers. Let's go ahead and break those down. Now, sales are actually up 23.67%. That means we sold 138 more homes in Santa Clara County in the month of March of 2009 than in March of 2008. That gave us a grand total of 721 homes sold in Santa Clara County in March. Now, we had a decrease of 9.41% as far as the number of homes that were listed in the month of March is concerned. That's down 193 from the same time last year, and that gave us a grand total of 1,858 homes that were listed in the month of March. Now, inventory was down 7.19%. That was 397 fewer homes listed in the month of March than the same time last year. 397 fewer homes in the inventory than at the same time last year. That gave us a grand total of 5,125 homes currently on the market. Now, what's great is that this is a big improvement as far as the ratio is concerned. Now, if you've listened to my show before, you know that the ratio I look at is the homes that sold versus the homes in inventory, and that sort of gives us two things. It gives us how many months of inventory do we have on hand. In other words, if the inventory numbers and sales numbers froze as they are right now, how long would it take us to sell every home in the market? But it also gives us an idea of how much competition each home that sells has. And as that number stands right now, we have about 7.19 months worth of inventory. We're to put that into different terms. For every home that sells, there are about 7 homes trying to get sold. So there's still lots of competition out there, but this is a much healthier number, and it's down from last month, which was 8.67. So all in all, these numbers are actually pretty encouraging. Let's see if this trend continues. We'll look at the supply and demand numbers just going back now over previous months. So this does have seasonal influences in it, so you'll want to take that into account. But it goes back to December of 07. And we'll see here that the trend lines that we're seeing do tend to still indicate an increase in inventory numbers, despite our year-to-year numbers. But what's interesting is that given an average over the past period of time, the number of homes that are being listed is actually pretty flat. And the number of homes that are getting sold, we're definitely seeing an upward trend. So those are all good things. Not all. I mean, inventory, obviously, we'd be happier, but we've seen such good decreases. Now, let's take a look at this and see what sort of trends led up to March of last year. Now, you'll see that we saw a much more dramatic increase in inventory in January and February and March on a month-to-month basis. The increases were much more subtle this year, but the trend was the same. Still an increase, just not as dramatic an increase as last year. And if we then look at the homes added to inventory, the homes listed, we see the same kind of trend, but again, not as dramatic. Between January and February, a very subtle increase in the number of homes that were listed, and then a little bit of a bigger jump between February and March of 2009, and we saw the same sort of trend last year. Now, as far as sales are concerned, this year they remained relatively flat, but flat at a higher point than last year. So in January and February, sales were almost identical from month to month, with a bit of an increase in March. January and February of last year, we actually saw an increase in sales between January and February, and then a little bit of a more marked increase in March. Again, same trend. So if we take that these trends are likely to continue, and there's no reason to doubt it, odds are we're going to see a continuing increase in inventory. I'd say we see a more subtle increase in inventory than we did last year. You can see that from March to April, there was a pretty dramatic increase. My guess would be that we won't see as dramatic an increase from March to April this year as we did last year. I think it'll be a much more subtle increase. I think we may see a bit of an increase in inventory simply because an increase in listings as well, just because that tends to be what happens this time of year in March and April and May as people are heading into summer. We just see that's when folks want to join the marketplace, and we'll see that probably peak in April and then decline from April through the rest of the year as we saw last year. Now, as far as sales are concerned, I think we'll see the same trend. We'll see sales increasing between March and April right up until we get into June and July, where we'll see things sort of peak out. We may see more sales than last year. In fact, I'd bet we do see increased sales from last year. There's a lot of deal taking coming on, and I'm seeing an awful lot of folks doing searches on my website, calling more frequently on properties. There's generally a higher level of activity on the part of buyers than I saw at the same time last year. So just anecdotally from my experience, I'd say we're going to see these good numbers tending to continue throughout the summer season. Now, let's go ahead and jump into short sales and foreclosures. Last month, let's go ahead and just bring it all up here. I wanted to normally I only show you what the current month is, but I also wanted to show you what last month was to sort of show you how things are transitioning. As you can see, in the month of March, 13% of the homes that sold were short sales, 51% were foreclosures, and 36% were conventional. Now, while that's not great, no one wants to see those kinds of numbers. What's interesting is it's better than last month. Last month, only 32% of the homes that sold were conventionally sold homes. This month, that number's up to 36. I'd love to see this go much further. It looks like we took a big chunk out of the foreclosures from month to month. If this trend continues, we could see conventional sales start to take up more and more of the marketplace, and that would be a good thing. That would be definitely a sign of increased health. Now, what are things that are concerning me about this statistic right now? Well, we're seeing an increase in the number of homes being foreclosed on that were not subprime loans, those types of things. In other words, fixed loans, totally conventional, nothing about them being risky. Some very mainstream loans are starting to foreclose at a higher rate. The Mercury News actually covered this last week, and that may cause a little bit of a blip in foreclosures, but all of this is sort of happening at the same time. These numbers in March really indicated this is all news that was based on things that were starting in March, so a little bit of it is already incorporated into this. We'll see how much this trend continues in the coming months and see what an effect it has on their overall numbers. Now, let's go ahead and take a look at home prices. Again, these are home prices going back years, all in the same month. So this is March, going all the way back to 1999. Look at that dramatic drop in the average price of homes between 2008 and 2009. Now, we've all been suffering under this market since about 2007, but wow, did it hit in this calendar year. Now, the average sales price was $592,941 in Santa Clara County. The highest priced home was in Los Altos Hills, and that was at 13815 Barton Court. That home sold for $9,950,000. Its list price was $9,950,000. It sold for asking price, and it sold in only 14 days. It's always interesting to see numbers like that, particularly on a house that sells at that level. But it's definitely an indicator that we still have a very segmented market. It's not just homes at the high end that are not selling. Clearly, homes at the high end are able to sell. We're still seeing buyers at various levels. We're just seeing differences in the level of activity. Now, I didn't get a chance to see that particular home in Los Altos Hills, but I've reviewed the photos and it was clearly a lovely home. So whoever ended up purchasing that property probably had seen some other homes in the same area, the same price range, and decided that this just had everything that they wanted. Now, the lowest priced home is at 124 North 26th Street in San Jose. That home sold for $159,000. Its original list was $199,000, and it was on the market for 88 days. Now, that home was a foreclosed property. It was owned by the bank, and it looked pretty much like a complete loss. In other words, that whoever bought that property is either going to have to do a whole lot of remodeling or just start over from nothing. Now, the change from last year as far as home prices are down 39.76%. That's a humongous drop. From a dollar standpoint, that's a drop of $391,384. Now, how much lower can it go? Well, to be honest with you, I think that what we see here is look at these numbers have basically corrected all the way back to, depending on how you look at it, 2002, 2003 level, or the time the time between spaces of 1999 and 2000. I really think that we're seeing a scraping at the bottom of average sales price here. There are still some neighborhoods, still some communities that need to come down further in price, simply because they managed to dodge a lot of the downturn in the market during 2007 and 2008. But by and large, this feels like we're hitting bottom here. I don't see how we could go a whole lot lower. The Bay Area still has such a diverse economy. It comes to a certain point where you have to say that buying a home makes sense, and I think we're at that point here. The big question is going to be what's going to happen with all of the surplus homes. Now, an awful lot of homes have been built, and when there's that many homes just sort of out there on the marketplace, new homes that aren't selling, new home sales are still down at a very low level. Pre-owned homes still are dominating the market as far as what's selling out there. It'll be interesting to see what happens with a lot of these properties that are unoccupied right now for one reason or another. But as far as I'm concerned, I know I personally am considering this a great time to buy, and I know I'm shopping for an investment property myself. Now let's go ahead and take a look at home prices in recent months. This is clearly showing a trend. Let's go back to home prices in recent months. All right, so here's where we stand. We've actually seen sort of a bottoming out here. And this is an amazing graph because remember, this is going back month to month, and there are almost no seasonal influences here. We don't get a blip in the summer months of last year where prices tend to go up. Prices consistently just dropped and dropped and dropped every single month, with the exception of December of last year. But we then sort of bottomed out in February, and now things are starting to creep back up a little bit. We may look back on this time as where it bottomed out. It'll be very interesting to see what happens in the coming months. There's absolutely no way to anticipate where prices are going to go based on past performance. That chart tells one story, and that is prices are on their way down up until now. So the next few months will be very interesting to see if we start to see this number start to increase some more. We may be able to officially say we've hit the bottom of the price market for homes, and things will start to recover from here. The only question then is at what rate will they recover? And I don't think we're going to see some amazing dramatic increase in home prices. I think as things stabilize, we'll see homes at the lower end perhaps recoup a little bit, the homes sort of in the middle range sort of staying where they are, and homes at the higher end probably having to come down still a little bit more. So there'll be some flexibility in prices on the fringes of pricing, but I think those homes that sort of occupy that center point really will just stay right where they're at for a while. Now, as I said, the average sale price in the county was $592,941. The change from last month, February to March, is an increase of 7.31%. As far as days on market, let's go ahead and take a look at that and see what we can figure out here. Now you can see a steady increase as far as how long it's taking to get homes sold. This is again just the month of March going back to 1999. It's been steadily increasing since 2005 when the market really started to do its reversal. What we see here is a 34.21% increase. That is 26 more days on the market than at the same time last year. I think all of this sort of figures in. We've got an awful lot of homes in the inventory, although that number's starting to drop down a little bit. It wouldn't surprise me if we start to see this. What this will be a lagging indicator, basically. Homes will start to sell in greater numbers, and this number will go up. And the reason it'll go up is because we'll be flushing out a lot of properties, and as more and more buyers come out, we'll be flushing out properties that have been on the market for a long time. So that will, for that month, even though sales were up, we'll see probably a general increase in the days on market, unless those older properties are very much outnumbered by properties that were more recently listed. But in general, you'll tend to see a blip in this number at the front end of a recovery in a market, simply because we're finally selling off properties that have been on there for a while. So if in the next couple of months we're discussing these numbers and you see an increase in sales, but a dramatic increase in days on market, if I don't address it, try to remember this show and realize that sometimes these numbers do show that this is a lagging indicator. The days on market, once we've sold off a whole lot of the inventory, then this will normalize and start to go down. Okay, now, days on market just in recent months. This is just going back month to month again, and we'll see if we can spot any trends here. Again, you have to sort of modify this for seasonal influences. We tend to see peaks in the winter months when things just sort of sit. There's a lot less selling activity, so things tend to accumulate days on market in the winter months. And you can see that was true in 2008 in January, and again in 2009 in January. What's interesting is that last year we saw sort of a steady decrease. From January to February was a decrease. February to March was a decrease. What's interesting is that this month we see a little bit of an increase. So that's a little bit interesting. That's a 2% change from last month. It's an extra 2 days, so it's not a huge number to get concerned with. But it'll be, and again, remember, we will start to, when we sell more, and we sold more homes this month in March, so we may see this number start to nudge up a little bit as sales increase and we take reductions in our overall inventory. All right. Now, I do appreciate you taking the time to listen to what I have to say on these subjects. Just to sort of recap the contact information, if you'd like to get in touch, you can find all of my information, web presentations, video presentations, podcasts at www.soldbyrobert.com. If you'd prefer to contact me via email, send those to robert@soldbyrobert.com. Phone number is 408-852-0525. If you prefer to use an online instant messenger software, you can use AOL Instant Messenger, Google Talk, or Yahoo IM, and the screen name is The Rebel Broker. Using Skype, just use the screen name Rebel Broker. And, of course, referrals are always appreciated. If you or anyone you know is interested in buying or selling real estate in the Silicon Valley area, please feel free to get in touch. And if you have no interest at all in Silicon Valley real estate, if you just like an agent who is good at what they do, I can find the right one for you. Just get in contact with me and let me know what you're looking for, and I will track down the right agent for you. Thanks again for watching this video, and I will talk to y'all next time.